Hi friends, welcome to the weekly stock market update, and we're waiting on Nvidia earnings, which as soon as they happen, I will let you know. Also breaking news, Gautam Adani charged in New York with massive fraud. Interesting. Now, we're going to keep an eye, as I said, on Nvidia and what's coming out of there. But of course, it's about the weekly stock market earnings and with stock market report, and here we go. Right, exciting times, and I'm going to give you the next batch of Trump trades. So he's been in office for 2 weeks. The companies which have soared the most, not just in the initial exuberance of him coming into office, but now going forward, should give us a better idea of whether these Trump trades have got legs and so on. There are those who might obsess about getting in beforehand. Well, actually, it's a lot safer to get in afterwards. Welcome, one and all. You should all be able to see and hear me. I have Buckinghamshire in the room. Andy from Plymouth. Peter said the original link did not work. Sorry about that. Auckland. As well. So welcome one and all, and everyone still coming in. So good to see you. So we're going to go through some Trump trades. We're also going to go through a whole bunch of bank selections and so on. So there's quite a lot to cover. Let me know, as I always ask, does this time suit you better than the one I normally do? Hello, Narendra, Ravi, Andy, and everyone made it in time, and everyone else. There's a hell of a lot to cover. Okay, remember, this is not individual financial advice because I'm not speaking to you individually, but also stocks can go down as well as up, and it is for education and information, not solicitation. Okay, you're all, as I do every week, if you're new to this, let me know. If you've not had the chance to collect a copy of my book, Investing Unplugged, I'll make sure you get a link before the end of the webinar. I've had endorsements on the jacket from multi-billion-dollar hedge fund managers, Bloomberg presenters, Financial Times columnists as well. I'm going to start off with something relatively new, and I plan to continue doing this for my webinars. Just let you know how my week's gone during the week. Well, I hosted an event last week in Parliament. That's me. You can just see me there. And that was about international trade. Now, you know, with the Great Investments Program, I look for outstanding companies from around the world. Well, I have a similar role with the British government, which came about after I won the competition in the Financial Times. They said, well, look, you do this for other people. Can you do it for the government? So I look for outstanding companies to bring to Britain, which are private. So almost the role in reverse, which will then eventually be the kind of companies that I would want to invest in when they're listed. Okay, so that's an event I held this week in Parliament on that. You can see what that is. You all know what that is. That came in, from YouTube. So I got one of those silver things, which even my family was a little bit worried about that. How much time am I spending on YouTube? Okay, so I've got some prefer 6, some say, Jeff, I know, my friend, you're in Spain. I'm getting older, Barry. I hear you. I'm so okay. I'll bear that in mind regarding 6 and 9. It might be that 8 becomes better as well. My wife, who works in the government, was at the AUKUS meeting, and I'll touch upon that, which is the alliance between the United Kingdom, Australia, and the United States. It's a security alliance, and the nature of her work means that she was invited to that. And I'll discuss a little bit about that in terms of the things that she can tell me and I can discuss. But it does relate to the bits which are relevant for us in investing. I'll discuss in a second. Also this week, I had an event at LinkedIn. That's me on this sofa. That's me speaking at the LinkedIn offices. That's me, as you can see. And a friend of mine became head of the National Intelligence Agency in the United States. So she's head of National Intelligence in the United States. That means the CIA, NSA, and the FBI chiefs report to her, and she reports to the president, and that's Tulsi. So I'm really proud of her. So really pleased. That's me outside our offices in Washington, and that's a photo we took together when in Malibu. More on that in future anyway, but yeah, she's the America's highest ranking, well, spy, I guess. Now let's talk about the books and everything else. You can get the books, for those who haven't, through that. You can get the book there. Okay, that's the book. So one of the other new things that I want to do in these webinars going, Thomas, thank you. 8 would be better, understood. One of the other things that I want to do going forward, and it's a new thing, is, and this is proof popular, is just spend a few minutes giving the macro outlook before I go into specific stocks. Okay, because that proved incredibly popular after Trump, given how much is going on in the world. So I sort of did a little AI image, what that might look like, sort of market insider access. So let's start off with that. Now, for my Great Investments Program people, I'm going to do this in far, far more detail. But the idea is that I call upon the things crossing my desk, the resources that I have, the things that I hear, the people I'm speaking to try and give you a perspective which you might not get from the elsewhere. Basically, if you can get it elsewhere, there's no point me talking about it. So I'll try and give you a different kind of perspective on these things. Now, the public webinar, which I'm doing now, compared to the private Telegram one that I'll do, this one will be more of an overview. The other one for the Great Investments Program clients will be far more detailed. So I'll give you sort of the kinds of things which my roles, various roles in the UK and US take me across, and obviously in the hedge fund industry, the stuff that crosses our desk and what we see. It's not infallible. There'll be things that we just don't know, and stock prices move without us knowing why, and then we find out later, oh, somebody was selling a whole chunk of stocks and so on. Now, some of the things I wanted to cover, and there's so much to cover, it's very, very difficult in no particular order. I want to remind you that a tariff and the tariffs that have been spoken of, am I spelling that wrong? Apologies. The tariffs that are being spoken of, in a perverse way, could be beneficial. And the reason they're going to be potentially beneficial is they're a tax, okay? They're like VAT, right? And if you're raising taxes, essentially, which is what Trump would be doing, then if you're also going to be spending, and he is looking at cutting government spending, I know, but if you're also spending and you're inflationary, that tempers things somewhat, and it means that, and it's a balancing act, that interest rates can actually fall. Because if you're taking money out of people's pockets through taxation, fiscal policy, then monetary policy and interest rates, you could have dropped sooner, and that keeps the market pretty bloody happy. And last time when he said tariffs, the stock market didn't tank. The stock market certainly rallies on falling interest rates. So I actually see his tariffs, which are going to be quite selective, as a potentially positive thing. It's just a measure of fiscal policy. He's smart enough to know that instead of just saying, oh, I'm going to raise your taxes so that I can spend more money in the areas that I want, he knows, hey, let's reframe this into marketing. I mean, what is Trump good at? What is his number one accolade? He's got many. What's the number one? Branding, marketing, right? That Trump tariff, it's a marketing gimmick. It's just fiscal policy. That's all it is. Okay, and everyone's sort of having heart attacks. So they don't worry me, and that's the point I wanted to make there. I guess to some extent it's the same point as that one. The next thing I want you to know, and you might have missed this. I've got family members who work in Saudi, and I've got friends who are out in Saudi quite a bit. And it's something which I wouldn't normally see. The Chinese government has sold, and we're doing this bit before we go on to the stock picks and everything else. Okay. So let me know if you like these bits, and I'll try and keep this bit brief because I know you all want stock names, and I've got a lot to throw at you. Thanks to Trump, more have come up. China sells US dollar bonds. In other words, Chinese government borrowing money, selling its bonds, but it did it in US dollars. For all those people who think it's the end of the US dollar and that's why Bitcoin is making all-time highs, and it has made all-time highs tonight, but it's not because of debasement of the US currency, and it's still the world reserve currency. If you want proof of that, the Chinese are taking more US dollars, okay, than they needed to, because they could have done it in a different currency. They didn't sell this in Hong Kong this time. They did the market for various reasons, I guess. And I used to travel a lot to Hong Kong. In fact, a friend of mine is on the board of the Hong Kong Stock Exchange, and his father used to be chairman of the London Metal Exchange. Actually, not just a friend of a mentor of mine, Apu Bagri. So he's on the chair. He's on the board of the Hong Kong Stock Exchange. Anyway, they didn't get the Hong Kong government didn't get to issue this. Saudi Arabians did it, sold it. That's where they launched the thing. Now, obviously, the Chinese are trying to get closer to the Middle East because that's where the tussle is. It's something which has come out from. There's no secret here from my wife's meetings at the AUKUS thing. The Middle East can go either way, and we need to keep a close eye on it. And the Chinese are fighting over it as well. But anyway, that's partly where that happened. For me, that's not destabilizing. If anything, that is actually stabilizing. The Chinese have got a whole load more dollars, so they've got even more skin in the game, ensuring the dollar doesn't collapse. And secondly, yeah, they're tussling in the Middle East. It's not war. Okay, it's not really a problem. Interest rates, like I said, they could fall. I'm going to give you a summary in this one. The more detailed one will go elsewhere. Bitcoin highs. I bought some Dogecoin, more Dogecoin, and it was for fun. I do think if you're going to do these things for fun, then fine. I certainly wouldn't want to. I mean, think about it. Would I want to put my entire pension on Dogecoin? Obviously, 12 months from now, you're all going to call me an idiot for not having done so. But Dogecoin was that worthless one, worthless in the sense of absolutely no use. And Elon Musk said, I can sell this, and it's now doubled, I think, in the last week or so. And I bought some more purely for fun. Okay, let's get this absolutely clear, purely for fun. In the same way, I might buy, as I've said before, Walt Disney Mickey Mouse notes when I go to Disneyland. Nuclear president. What I meant by that is not what you think regarding the nuclear protocol out of Russia, which doesn't particularly concern me, but we're going to look at some of the concerns. It's whether he'll say, look, deregulate, use more nuclear power, get the energy from wherever you want. And I suspect that'll be the case. I've always hinted, or I've suggested that nuclear fusion, after AI, nuclear fusion is going to be one of the big things. We've already solved diabetes and fatness thanks to Ozempic and Novo Nordisk. Pretty much solved that problem. Carbon extraction out of the air. Some of those technology companies I talked to you about, the groups that I was talking to LinkedIn and that I talk about in Parliament, those British companies. One of the ones I brought to the UK was a company called Carbon Clean Solutions. You can look it up. They extract carbon from the air. That problem we're already starting to solve. In terms of energy, that's going to be, I think he's going to focus on, well, not focus, it's going to be one of his many things as well. This mass deportations could be a bit of a problem because it could be inflationary. I'm not going to go into that in too much detail at the moment, but it's the kind of inflation which is not solved by simply elevating interest rates. So if anything, it'll be the kind of thing where you do want to reduce interest rates because if you get rid of a whole load of workers, that's what's going to happen. Personally, I think they're probably going to get stuck in legal issues. I mean, which is the most litigious nation in the world? I mean, even the Brits can't get rid of illegal immigrants because of some two-bit lawyer in Birmingham. What makes you think the Americans are going to be able to get rid of anybody? The lawyers will have a field day. So you've got that, and the Democrats will fund the lawyers. So I don't see those deportations happening or that inflation for that matter. Consumer discretionary has taken off. We'll come to that later on. Anyway, I don't want to go into too much depth for this. I'll save that for the private channel. This map shows GDP of each US state compared to similar sized economies around the world. It's one of the reasons, and I've done over the years various versions of this. California is about the size of the Indian economy. The Indian economy is larger than the British economy. And that just goes to show you just how massive the United States is, let alone the fact that the companies which are in each of these states are global. So when people say, well, I want to invest a little bit in Vietnam and emerging economies and all this nonsense, you've got the world in one country. And it's big enough to manage your portfolio, have your portfolio in it. So anyway, that's that. Look at that, poor little Italy. The G20 met. They don't need to have a meeting of the G20. You just have the Americans turn up. Just have a meeting of each of the individual states of the United States. I don't think they ever do that. Anyway, as I've said before, this gap between the UK and the US market, that's the NASDAQ, that's the Dow. Dow 297. NASDAQ, sorry, S&P 297, S&P 297% up, 600% up for the NASDAQ, and the UK markets 47. So that gap's going to get wider. It's going to get wider because the government policies that are going to be implemented and so on. So that's not going to change. That's actually going to get bigger and bigger and bigger. I just want you to know, which means these gaps are going to get bigger. All right. Trusting these Muppets is going to get worse and worse and worse for British pensioners because they're going to be predominantly still with their hands tied behind their backs, not in more of the US stocks. And they're going to be too diversified and spraying and praying elsewhere. So their performance is going to get even poorer because the money's going to come from concentration, not from spray and pray. Right? Which means they're going to leave their clients probably around the 5% return mark, which means they're going to take 14 years to double your pension. Whereas, I just had one of my students say that he's looking at that, which is modest, given that I really want them to be looking at that. Try and double it in 3.8 years to 5. I mean, anywhere there, and I'm happy. And of course, a couple of 40% years will help make up for any 0% years when the markets are falling. Okay, but that's what your St. James's Place person wants in a nutshell. This is what we want. How do we get that? Well, the US stocks that I'm going to show you are the ones. It's not me doing it, it's those companies, okay, that are doing it. And they're the ones which I'm more than happy with. Now, Martin, do you read the Sunday Times? Steel tariff cuts lots of jobs last time they introduced the tariffs on steel. The stock market kept roaring ahead. So yes, tax causes job losses, as what was said by retailers in the UK, that the UK government's taxation rise on employers will mean retail jobs being lost. That's right. And similarly, tax rises do cost job losses usually. Phillips curve. Best ever essay I wrote in economics at university was one about the Phillips curve and the breakdown of it. But anyway, so yes, Martin, they do. The stock market keeps roaring ahead. I'm talking about the macro and then the individual stocks. We're not talking about perfection, where everything, there is no job losses and no industry loses. Now, what are valuations looking like? Still expensive, same old, same old. What you're seeing is you're paying $27 for every future dollar of expected profits in Microsoft. $27 you're paying to buy $1 of future expected profits in Apple. And the banks continue looking cheap. We still continue holding JP Morgan and Goldman Sachs. I probably should have bought more of those banks. And we'll come into some more of these. The ones which are looking cheap at the moment continue to be telecoms. It was utilities, not so much now. It was energy. Where's energy gone? A little bit, not too bad. We'll come into some more of these because valuation is not the only thing that moves stocks, as you well know. Growth does, for instance, which is why people pay more for Apple and Microsoft than others. And there's a story out tonight that Microsoft, Apple are the most under-owned mega cap tech stocks poised for a rebound, Morgan Stanley says. I'll cover that elsewhere, probably on Telegram elsewhere at some point as well. Just keeping an eye. Do you know the ticker for the S&P Investor? Not off the top of my head right now. Yeah, a lot of people keep asking for the S&P ticket. Depends which broker you're using, because you'll want a UK ETF on that. I'll get that to you. I'll try and get that to you before the end of the call. Earnings calendar, S&P, obviously the biggest thing to move the market is what's going to happen with NVIDIA. So that's where we are. Palo Alto Networks, these won't move the market as such. They'll just move themselves. So they're less important. Okay, but if you happen to own any of these, then it'll make a difference for you. So what are we going to do for our stock selections? Well, in a way, we're going to put data to things you already knew, but we're going to put some a basis behind it. So I'm going to look for undervalued companies, because from the literature and written in my 200 odd Financial Times columns, my books, we know undervalued companies from the academic literature, let alone your common sense, do better than overvalued ones as a rule, but not guaranteed. Growing ones do better than non-growing. So we're going to look for value, growth, income, and we're going to weigh those factors because we know value is more important than growth, is more important than income. Remember, all decisions in life come down to an algorithm. What's important is it? How important? What's important? How important is it? What's important? How important is it? Whether it's deciding who to marry or where to go for dinner. What's important? How important is it? And when you get the judgment or perceptions wrong about things, that's when things blow up. Or if there are pieces of information which you can't know, like even with all of this, it doesn't guarantee that your picks will go up because Trump does a tweet and things can change. Cash return on capital invested goes from Goldman Sachs Wealth Management. The reason we want all these first 5 columns ticked green is because if they are not, then there's information we're ignoring, which means we're gambling. If you ignore relevant information, it means you're relying on luck. If you're relying on luck, you're gambling. Okay, so we want to remove the space in which luck operates as much as possible. There might be companies which are not on here which might do incredibly well because Donald Trump does a tweet. So be it. They're not the type we want in our portfolio. Also, for those on my program who use this spreadsheet that I give them, please watch out. The volatility is marked in pink because not red, but pink, just as a warning. I prefer things below 20% volatility because trust me, over 20%, you start getting panic attacks. I certainly do with my old age. Okay, and we want high sortinos, which comes from the hedge fund industry as well. This comes from Goldman Sachs Wealth Management, this from the hedge fund industry, and this from Thaler, Famer, and Kahneman, 3 economists who won the Nobel Prize in economics. And it's their data, it's their sort of approach, and I put data to it that I use. So let's look at some of the Trump trades. This is what's happened since he was elected. Okay. Now, not all of these have moved up because of him, but I've tried to look at, just ignore that one, I guess, at the top. I've tried to look at the exchange traded funds which have moved up the most since he was elected, and then the prices of stocks which have moved up the most since he was elected, because he's been there for 2 weeks now. Now, this doesn't make them all Trump picks, but there's some interesting ones which I will write about and post in more detail. I know some of these have just been going through the roof, like AppLovin, can't seem to get enough of it. Quantum computing, they've picked that name for a reason. Presumably he's going to be spending a lot more on quantum computing. And that's also something which has come out. I've started a new podcast and I just covered cybersecurity, quantum computing. And the reason I said when my wife was at the AUKUS meeting that there is World War III, which has already started, and it's with China. It's cybersecurity attacks, and quantum computing and cybersecurity are intertwined because quantum computers can decrypt your password. And if that happens in the next 12 months, there are no more secrets. But the quantum computers are also, some of the companies are working to prevent that. So anyway, that might be one reason why that's shot up. We'll look into some of these to make sure beyond a narrative, they also fit financially. They're not just hype, they do fit. And I think I've got Cecil coming up a little bit later as well. We want to tick for value, growth, income, cash flow, Sortino. Now, it could be you all just decide, you know what, we're going to create a portfolio of these. We're just going to buy them and hold them until Trump leaves office, one way or another, either through an impeachment, assassination, or end of term. Put your odds on which one of those is going to happen first. But whichever it is, you could just do that. Now, I'm going to instead look at some of these specifically and see if they're worth buying. And if they are worth buying, how long would you hold them for? Where's the profit target? Is the reward to risk worth it? Are they too volatile? And similarly with some of these, I'll look at these as well. Interestingly, the ones I wanted to draw to your attention, I mean, Coco has almost certainly got nothing to do with him unless he's smearing it on his face. Physical Bitcoin was interesting. Look, be weary of triple leverage, okay? Just stay away from leverage. Well, stay away from triple leverage for definitely sure. You can see the Bitcoin ETFs. There's many ticker symbols. They might not all be listed on the London Stock Exchange, so you'll have to find the alternative of those, okay? And there's one all the way down here. So I'm going to discuss some of these going forward as well, because I know there's a hell of a lot to cover, okay? And right. So past week, right? This is what the past week was. So what? Let's dive a bit deeper. Disney shot up over 12%. Isn't that phenomenal? After so many weeks of it being frustratingly poor performer, and that's a lesson for the patience, as Warren Buffett says. the stock market is a way of transferring wealth from the impatient to the patient, right? So we'll come to that in a second. So a bit of a battering after the first week and he came in. So let's look at that more deeply. Of course, over the past year, we're laughing. Now, I've said this before and I'm going to repeat it. I think for the sake of my pension, so focusing on my pension, I think over the next 2 years, not 1 year, because that's a tighter forecast, over the next 2 years, I should see a repeat of that. Okay, that much green and those kinds of rises. I'm not saying Walmart in 2 years is exactly going to go up 61%. I'm going to say there's going to be a bunch of companies which will do the 61s, the 41s, the 20s, 61s. You know, it's going to be a lot of green and a lot of high returns as well. And I'm going to say 2 years to give myself a lot of wiggle room, not say in the next 12 months alone. Okay, so let's make sure we're in a position to take advantage of that, because that's the critical thing. It's not that people don't know what necessarily to buy. There is a bit of that. They don't even know how, okay, in their SIPs, ISAs, or whatever else. ETFs, well, how often have I sort of said, oh yeah, well, there's the crypto down this month or up this month and sort of ignored it. Boy, has that shot through the bloody roof now. But I'll do a separate video on ETFs. Let's also have a look, therefore, at price earnings. US market price to earnings. Yes, it is expensive. It is expensive. It's over here. It's at 32.6. The average tends to be 30. It's not too expensive, but it is expensive. In other words, you're paying $32 for every dollar of profit a company makes. Imagine you buy a house for £100,000. Sorry, no, let's make it simple. For $1. Somebody sells you I beg your pardon, the house is producing rent at $1 a year and you pay $32 for it. You might think, I'm a bloody idiot. You know, I'm paying $32 for a house that only pays me $1 in rent. Okay, you get the idea. That's what price earnings ratio does. And it allows you to compare all the different houses, whether they're 10 bedrooms, 4 bedrooms, Mayfair, Knightsbridge, or Yorkshire, right? So that's where we are. Now, what's going to be really important is not just total market cap or total revenue. These things are important. This is the big figure. That's what's important. Market cap has increased, but earnings haven't. That's why PE is expensive. If earnings can catch up a bit, only a little bit, or this maybe comes down a tiny bit, then that's fine and we're not so expensive. That's where we're at. What's been doing the best? What looks good? You might want to take a photo of this. I can't go through all of this. Forecasted growth. You can see some things have massive growth. Okay, forecasted, right? But they're also a bit too expensive. 30 times, maybe less expensive than the market. Maybe more expensive than given the growth they've got. You can do a simple formula, can't you? Now to work out what price earnings, guess what? PEG ratio, price earnings growth. And a lot of these things are very expensive. The things which aren't expensive actually don't have much forecast growth anyway. So I don't like top down, but I just thought I'd show you where some of the expenses coming from, because people go, oh, it's really expensive, market's really expensive. Well, actually, no, some of it's ridiculously cheap, like financials. But then the forecast growth isn't that great. But then again, Goldman Sachs isn't exactly about to. So we want to look bottom up, I think. In terms of the US market, over the past week, the top gainers were these. And Shopify, Netflix, JP Morgan, Disney. Oh, look, the top, this doesn't always happen, but they're all part of our Great Investments Program portfolio. Although that's taken a battering for so long, it's about time it bloody jumped up. But anyway, in terms of the UK market, that's where we are, 19.8 times, again, obviously cheaper than the US because great things aren't expected, but earnings is what's taking a bit of a whacking there. It's a 2.4 trillion market cap, and earnings are, yeah, they've just not been keeping up this year. A whole different story to discuss. We can discuss it whenever separately. You can see forecasted growth. You can see price to earnings. You can take a picture of this if you wish. It's not one I'm going to pour over because there's a whole thing there as well. Okay, Vasca, thank you. Vasca said, I expect quantum computing stocks might be inversely correlated with crypto. Well, crypto and quantum are going in the same direction. But yeah, I take your point in terms of what you're saying. They could unblock the blockchain, as it were. And that's the UK market over the past, the top gainers. Not something I'm going to particularly discuss at the moment, but you can take a picture if you wish, because there's a lot of data. Now, let's look at markets year to date. Where are we on this? And let me know if there's, well, later on, just message me and let me know if you want more of certain things and less of others. Year to date, the S&P is up 23%, NASDAQ up 22%. That's not bad at all. But look at how this has happened. The same point I make every year. 0% returns for prolonged periods. Look at that. From there to there, that was 0. To there was 0. Prolonged periods of nothing. That is why Warren Buffett says the stock market is a mechanism of moving money from the impatient to the patient. The patient get in there, wait to this, they've got that return. The impatient, they go, oh, I've got my money out. I'm going to buy some more here. This is just such an easy game. And then, oh no, this is terrible. I'm going to sell. Oh, I'm going to buy more here. I'm going to sell. And they're just trading their investments. They're getting wrong-footed and they're screwed. Okay, these have been the major sectors. I don't do top-down. I look for individual companies. I don't care or to gamble on a particular sector, but they've pretty much all risen. The ones which have done the best are, guess what? Financials. Wait a minute, Alpesh, that can't be right. What the hell? How can it be financials when you literally just told us that the financials are 90, well, okay, they're cheap, but the growth isn't there. Yeah, exactly. Forecasted growth and valuation are not the only factors that move stock prices. Momentum, Sortino, that's why we look at those other things. Because if they were the only things, we wouldn't have done Goldman Sachs and JP Morgan. That sector moved the most. Communications moved the most. Guess what? Energy and tech is only 19%, right? So it's not just about the things you think it's about. We also want to, therefore, look at this. We want stocks which tick momentum, growth, and income. They're a subset of a subset of a subset. Remember your Venn diagrams from school? We want stocks which tick all three boxes and are the rare thing in the middle. For the reason that stock markets don't move as easily as, oh, I'll just pick the right sector. Oh, I'll just pick value. Oh, I'll just pick growth. Those things alone by themselves still aren't enough. Over the past year, well, that's where you are. S&P, 30%, NASDAQ, 30%. Somebody asked me earlier, what's your average performance? I said, well, how the hell can I claim it's my performance for a start when if the S&P is up 30%, what do I say? Yeah, that's my performance. How's that mine? It's not mine. It belongs to Nvidia and Microsoft and Apple and Amazon and Costco and Walmart and God knows Crocs, God knows whatever else. It belongs to others that are in the S&P 500 or the NASDAQ. And the second thing is you say average. 1 year this damn thing is up 30%. Last year it was up 55%. The year before it was down 20 and we got 0% that year. So you want to talk about average, surely you should be talking about variance as well. So yeah, if the market continues doing this and we get 5 out of 7 years like that, which every 7 years you get 5 years out of 7 which are like this, we will do incredibly well. Not because I'm a genius, I'm not, simply because the market gives me a tailwind. And in the years when it gives a headwind, the 2 out of 5 years it does that, like 2007-8, 2022, 2000-2001, stroke 2, yeah, we'll be holding cash and get the returns on the bigger years. Because in a headwind, there's not much you can do. In a tailwind, there is. Oh, that's the UK all the way down there, by the way. So FTSE 350 over the past month, these are the biggest movers over the past month. Not proposing to talk to them. Let's look at some of the Trump trade rules. Now, these were the companies which have moved the most over the last 2 weeks since he was elected and since he won the election. And what we're looking for is 40% reasonable on the existing trend? Is a 20% stop loss sensible, or will volatility knock it out? If it would, then we wouldn't do it. So we want a 2-to-1 reward to risk. We want a 40% reasonable projection. And we'll look at drawdown depth and duration. In other words, how much does it fall and how quickly does it recover? And you wouldn't put too much capital in any of them. Anyway, so let's look at some of the biggest movers, all right? Now, on a value growth income rating, this is 6. It's outside of my 7. It's a little bit out there. But if you were doing this, and it's a bit overbought on there, now the banks seem to love it still. If you were doing this, you would ask yourself, is that projection reasonable to continue, which is a trend which is at the same rate of growth as this? And you'd probably put a stop loss here. You wouldn't put the stop loss here, would you? Because it would easily get knocked out just by noise. Equally, you wouldn't put it down there because it seems a bit bloody far. So you'd probably put it here, okay? And that gives you a 2-to-1 reward. That's your trade structure, boom. And if you want a bit more news about it, that's the company, marketing, monetization, content in the United States, right? And they're doing ridiculous. Earnings grew by 1,000% over the past year. They've obviously hit some crazy numbers. Has a high level of debt though. So it's a 6. Now, if this is a Trump trade, I'm just telling you what's out there, all right? It is, for us, value growth income 7, but it's high risk. And you'd really have to ask yourself, can it do that? If you think it can, there's your stop loss. Because if it's going to do this, it shouldn't drop down there. If it drops to that, then it shouldn't be going there. By the way, it's exactly what I used to do on Bloomberg TV and show this 25 years ago, the same structure. And when I learned the structure from, remember I said I'd give you the sort of insider insight. So when I met the world's leading hedge fund managers back for my book, Mind of a Trader, people like Bill Lipschutz, David Kite, Bernard Opperty, and the like, I interviewed them for the book. Financial Times published the book. I'm just using the same structure they taught me for structuring things to make money. Okay, that's it. So giving you those insights you can't get, well, you can get it from my book, but you can't get it elsewhere. And that Cecil, if you want to take a photo, feel free, be my guest to look at that, and you can do some more research and look at it later. Dutch Bros, who comes up with these names? Now, look, you can have a look at that, but I'm just going to tell you, do you think that's going to do it? I don't think that that projection is reasonable. My team have come up with that because I've told them to come up with projections based on existing trends continuing. The stop loss for something like that, I think you'd have to put it down here really, wouldn't you? Or down there. And you might say that risk is not worth that return. This might sound, for those of you who play poker, this might sound similar to poker. It's because a lot of good traders are poker players, okay? And that's the company, franchise drive-through shops in the US, right? Earnings grew by that. Bit short on the value. Wolverine Worldwide, what the hell? Okay, so that trend continues there. If you don't think that's going to continue, and this is since Trump came into power. Now, some of them might not have risen because of Trump. They might already be going to do it, but it looks like they have because of Trump for whatever narrative reason you can make up. Where would you put the stop loss? Probably here, possibly here. That's $22. That is high risk. This is high risk stuff. Everything I'm showing you right now on Trump trades is high risk. We'll look at Apple and Amazon and all those a little bit later on. Okay, these are high risk. I'm not sure I'd put these in front of my Great Investments Program clients, but I'm sharing them with you. Sport Trader Group 7, so value growth income 7, great, meets that, but overbought, so it doesn't meet our normal Great Investments Program criteria. Where would you put the stop loss? I guess you'd put it here, and that's the return you're looking at. Okay, and you'd make sure that if it dropped to there, you didn't lose more than maybe a percentage of your total capital. That's how you decide how much money to put in. That's what the company does. Okay, priority technology 6. There's the angle, okay, over there. And as I said, Trump trade, that's the angle for it. If that trend continues, that's what would happen. That's what the banks say. That seasonality, forget all of that. Where would you like to put the stop? There. Is that feasible? Do you think that's going to happen? That's got to continue up there. I'm not entirely convinced. I certainly don't like, well, dividend I'm less bothered about. That worries me a bit. But yeah, now that's already priced in, forecast to grow, but it looks relatively cheap, so it might catch up. That's the trade structure. I'm giving you the trade structure on Trump trades. Okay, now that's the direction if it continues. I mean, these have made a lot of people a lot of money so far. From bloody hell, from 7 to 35. Somebody's made a 5-fold return in the last 2 years on this. Okay, in America, there's a reason why so many people are so bloody rich. It's often the stock market. It's not because they get paid lots. Minority might get paid lots. Anyway, it's looking a bit overboard at the moment. Whilst it's a 6, you'd structure this by going there and putting that stop loss there. Okay, cloud-based bill payment technology and solutions in the United States and internationally. Well, hallelujah. God bless you. You're making billionaires. These guys make private prisons. I've mentioned them before. 7, because Trump's planning to lock up a lot of people, probably half his cabinet before he's done. Now, that is the stop, and that's the direction. Now, you might look at that and say, nah, that's not for me, Alpesh. That's a penny stock, it's about $100. I don't like that risk. No, these are all high risk. Okay? Isn't that funny? You think there was going to be low risk with Donald Trump as president? Hell no. Okay? Secure facilities. But they don't say prison, do they? The United Kingdom as well. Shh. Don't tell anyone. They're doing some of our prisons as well. Okay, so there we go. And OPI Finance, you can look at these in your own time in more detail. Where would you put the stop? There. Okay. Community banks. Graham Corporation 8, but it's overbought. So a lot of these are just, they're overbought if you want to go by the strict criteria of the Great Investments Program, but outside of the program, which is why I'm happy to share this because it's outside the program, I guess that's where your stop loss is. Okay. And if you like these sounds, great. Defense, space, petroleum, fantastic. Then you might think, I like it. That's the direction if it were to continue in that, or if it replicated what it did here, because it's done it before, can it do it again? And this isn't oversold, and this is one of the few which looks half-assed decent, but it's bloody high risk. $8 stocks in the US are ultra high risk. Where are you going to put the stop loss? I'd probably say down there. So as long as you're willing to lose half your money, you might be able to, if it goes back to its highs, make 137%. Are you going to take that risk? Okay. Infusion pumps. Hey, sweetheart, I've bet the house on infusion pumps. You can see why when on my program, I'm dealing with people who are looking at their pensions, we don't do the crazy high risk stuff because I don't give them what I wouldn't give my own family. But I think this is educational. And for some of you, this will be suitable. This is going to go to a very wide public. 7, that's half-assed good because there's momentum there. However, it's a micro penny stock. I don't even think brokers will be able to offer this. So I wouldn't put this in front of my students because I'd say, look, sorry, you can't put this in your pension, so leave it. And there's your stop loss down there. Right now, I do have a very small minority of people who follow me who love these tiny things and they go nuts over it. And they use Interactive Broker because I think that's the broker which would give you stuff like this. And they love it. Not an advert. Okay. That's what that one does. Gambling Group is an 8. So some of these have got good financials, aren't overbought, but just because they're tiny, which is, by the way, one of the reasons why they've moved so much. These will be low liquidity stocks. So even a little bit of money going into them, just because a lot of money went into Microsoft won't budge. A lot of money has gone into these, and so they've budged. Okay. Snowflake shares have gone up 17% tonight. They've made their announcement. Nvidia has doubled revenue. Jesus. Nvidia has doubled revenue. They've come up with it. How the flipping heck do you double revenue? Doubled. I wouldn't leave the office. I would sleep like Musk in the office if you're just when you're that size and doubling revenue. Gambling.com group is 8. I don't know if market cap was in there. Is it in there? No. So be careful. These are all going to be, you can assume they're tiny market caps as well, which is why they move so much. The Americans love all this stuff. Okay. Marketing company for online gambling industry worldwide. If he's going to deregulate, the guy, Trump owns casinos. What do you think he's going to do? Right? And he owns the Supreme Court. He's going to deregulate gambling. Right? So maybe he'll do the exact opposite and say, no, the only licenses that are available are for Trump casinos. Hallador 6. I don't invest on narrative. I invest on data. So that's a 6. We're looking at that angle over there. That's there. Where's your stop loss? Pretty clear you'd put it there. You might even put it a bit higher there, but it's a small one. Okay, so different to what I usually do on these webinars, I will cover the usual stuff as well. Okay, so don't worry. Steam coal. Now, why is that shot up? Well, obviously, because he's going to bloody let people dig coal again. So that should be going up. And I guess these are his polling numbers over there. So, yeah, this is one where I would say, yeah, you could get looks good, but that's bloody high risk. So when I used to do BBC Working Lunch, these kind of penny shares would come up, and I think, listen, it's just high risk. Please be warned. I don't want some little old lady buying into these, the proverbial little old widow, and getting her fingers burnt. Stop loss, there's that one, and that's your 6. Okay, that's what they do. Detention. So there you go. Detention facilities, correctional detention facilities, which is why you can see under Trump, they shot up. You tell me, what do you think is going to happen under Trump? More people in prison, like half his team, or less? So you can see that, and that's the bet that the market's making on it as well. Census healthcare. So you're looking at that getting up to there. Fine. Doesn't quite meet our value growth income requirements, but outside of the program, and you put the stop loss there, ticks those Trump trade boxes. Okay, radiation therapy to healthcare providers might have nothing to do with Trump. Might be that he's going to promote more US exports. Dealmaker Limited, 8. Come on, do you think it can go to where it was? If it does, then that's how you get that return. Otherwise, your stop loss is down there. You can see again, it's these small penny stocks which have popped the most because they're the ones which have the least float. So a bit of money going in, a bit of speculation really moves them. Super micro doesn't fall into that, I guess, because it's a bit bigger. 6. So that is Bitcoin basically that you're relying on. If I remember rightly with super micro, I might be getting it wrong, but whatever it is, that's the idea, and that's the stop loss. That might fall a bit more, so be careful. You might need to put the stop loss a bit further. Sorry, what? That's odd. High performance sewer and storage solutions, modular open architectures. Okay, I've completely got that wrong. They make sewer storage. Weird. Something's not right. Yeah. Okay. I'm 6. There's your stop loss. All right. Tissue, Alcaraz, Vistra. There's quite a few. There's a few coming up. Okay, so these lot all have got buys on it. There's your angle. You can now see where with a bigger company, why that's a little bit more attractive. MicroStrategy, that's it. I'm getting, it's late. Super micro, MicroStrategy. I'm getting both mixed up. So there you go. You're absolutely correct. Thank you. 7, and your stop might be there, might potentially be here. Okay, and that's that one. Now, essentially what I'm talking about, trying to get the most of, is this. Now, I had one client who said, do you know what I'm going to do, Alpesh? I'm just going to have 3 times leverage S&P 500. Why? Because the average positive return is 32% per annum. 32% over 2 years, which is why I said to you earlier, over 2 years, I think that's what I'll happy to get. And 88.5% of the time that happens. Yeah, I'm riding coattails of others who do great sewer storage. Yeah, can you believe it, Andy? Similar names as well. That's it. If that, so we were talking, and I was talking to another client, and I said, well, if you got 32% over 2 years, would you be happy if your pension went up by a third over 2 years? And he said, yeah, of course we would. That's going to come from some years where because the market tailwinds, it goes up 40%, other years where there's a headwind and it goes up 0. So that's how you get your 32 over 2 years, and that's just the S&P. So he said he's just going to do 3 times leverage on the S&P, and I warned him about leverage. Okay, so we'll come to that. Now, you get some great years like Trevor did. 12 months, I've seen a 30% increase in my portfolio. It's amazing for me and my phone. Can't think enough, Alpesh, for providing the information that you do. It's one of the reasons why I do this. It's one of the reasons I do it. If you want to see more of this, there's a whole load more stocks coming, so don't worry. alpeshpatel.com. Please remember, these are videos. Okay, these are not just images. So if you go there, you'll see the video interviews with people. Somebody said, have you got clients who can speak to? Yeah, they're there. Okay. One other thing I want to touch upon is the black swan events. What we're going to do in the case of end of the world. So I asked AI, what are the things which could end the world, and what's their probabilities? What worries me is AI has put these probabilities. That's pretty bloody high. That's not black swan. That's highly bloody likely. And we're talking about, I asked it over the next 12 months. So either AI knows something I don't, which is probably everything, or forget about it. Now, you know how I protect against the downside on the markets, okay? It's the daddy bear. If you haven't looked at it, I'll come to it in a second. So I expect with any of these things that it won't just be and then a sharp downturn, because it'll be the daddy bear. Okay, it'll give us some time to exit, or the rebound will happen so quickly we won't even need to exit, which is partly what happened with a lot of COVID companies. If you remember, the index, it dropped sharply, yeah, but it happened so bloody quickly that the rebound happened quickly enough that you didn't even need to exit in many cases. The example of these worries and things are this. Okay, escalation conflicts in the Middle East, China, Ukraine, global trade and energy supplies impacted, some kind of nuclear winter, semiconductor shortages, oil price spikes, and market instability. I'm just waiting for the Ukrainians to ask somebody, I don't know who, we'd like to invade Russia. But they've already sort of done it in that they've taken Russian territory, to say, now, I've looked on Google Maps. I suggest you do the same. How far is Kiev from Moscow? And I think it's a 5-hour drive, something like that. Unless I'm mistaken, if somebody could do it again, because I did it some time ago, might be more, it might be slightly more. Okay, that's the point at which they're happy to launch nukes. Crazy. S&P 500. Now, this is the daddy bear I'm talking about. Any of those black swan events happen, the protection I'm looking at is simply that if you look at this period here, you look at this period here, when that happens, overbought, and people ask me, what does overbought mean? It means you look at this graph, peak to trough, you want the top 25% means overbought, oversold, right? So if it's there, and here it just fell, even though it wasn't overbought, and just fell, then you want to be exiting at that point. Now this, it's up to you whether you exit or not. If you're risk averse, you'd get this straight out of it. If you're more risk neutral, risk loving, you just wait it out because it's not overbought anyway. Okay, now if that happens again, we'll do it. At the moment, it looks like it's going to keep doing this. That's the best case scenario. If I get that over just 2 years, not 1 year, if I get that over 2 years and my pension goes up just by the index, forget all this hard work I do. Okay, forget all of that, and I just do what the index does, let alone the fact that I've got 3 times leverage S&P 500s, which should deliver then over 100% return. If I just get 44% in 2 years, I'm happy, right? Because I live in a world where I'm taxed to the hill anyway, so there's no point. So you've got to make more. But if I'm happy enough to pay my taxes, I'm happy enough not to be greedy enough to try and get 1,000%, right? 44% over 2 years, I'm happy. Partly because I don't want to. There's a story today about a hedge fund manager who's got 18 years in prison. He blew 36 billion. He was taking wild bets. The biggest problem in my job is to make sure you don't, not go into prison, you don't blow it all. All right. So I'm happy with that, because that means quiet life at home. Everyone's happy. That's the best projection. That would require that to continue. If it doesn't happen and we get this first, and then we get this, then I'll still get my 44% over 2 years, because when that happens, we'll have to hold cash as we did in 2022. When this happens, we get the big bumper return anyway. So you still get 44% over 2 years. Okay, whether you get the down year this year, sorry, as in next year, or you get the down year in 2 years. One of those years is going to give that 44. Might be 2 lots of 22s, but there you go. Okay, so I'm easy. Nvidia is making the biggest moves after hours. I just need to see which direction. Okay, because I've got Nvidia, as you know. So let's see. We had it since January. It slid 2%. Actually, it's not too bad. So that's okay. If it only slips a little, then it'll probably rise a lot. So it's fine. 2% down is perfectly fine. It'll resume upwards then. So what you've got with the S&P is something that started in January 2023. Okay, and that gives our pension a good boost. Similarly with this, it's just like the S&P. Okay, either you're going to get that next year and then this, and during this period we have to hold cash so that we can pocket that return, or we'll get this return again, and one way or another over 2 years I'm looking at a 44% return or such. Now hopefully more, hopefully more, but I'll take that. Do you see? It's not how much I can make that I'm bothered about, it's what I'm willing to take that I'm making sure I'm happy with. It's like a negotiation. The market is negotiating with me. That could fall below there. Now, it might just bounce off. This is the FTSE 100. So I don't know whether that's going to bounce and then go up or drop. We'll have to wait and see, because that could be a daddy bear. Sideways moves, certainly. Top 10 S&P 500 stocks over the past month. Let's have a look. And as you know, since he came in, I put that trade on and explained why. He was, well, why didn't you put it in before? Well, if you want to gamble on the outcome of the general election, that's up to you. So if you're doing this as a trade and you say, well, look, Tesla is a special situation because he's now the best man he's going to marry Donald Trump, you could put a stop there and you would take that as a projection. But you might say, well, why should I put a stop there? The company's not going to go bust under this guy or there. Well, if you're going to do it, then maybe you don't need even a stop there, okay? Because that is beautiful in that direction. Because the last time it was there, this was here, and it moved from 67 to 277. Okay, so a fourfold increase. Is Tesla about to have a fourfold increase over the next 2 years? I think there's a 70% probability I'll have a fourfold increase over the next 2 years. Somebody record that and remind me. Okay. Palantir Technologies, cybersecurity, the thing that my wife was looking at. She knows the Palantir team. There's no inside information and there's no official secrets broken, just to be on the record and clear about that. Bit overbought. It's one of the big movers of the week. And I think one of the reasons it is one of the big movers of the week is Tulsi is head of the Director of National Intelligence for the US government, and Donald Trump know China is the big threat. Okay, they both know that. Palantir fights the Chinese cyber threat. They're going to be getting more and more contracts from government, as is Microsoft, because the Chinese threat is people aren't paying attention. The people who know are trying to scream at the top of their lungs, but it's bigger than we realize. Okay, so essentially, World War III has begun. I didn't say that. I can't tell you who said that, but the person who said it, shit, you should pay attention to them when they say it. So Palantir Technologies, that's it. And would I get in now? Well, if you want to put a stop there and project that forward, then fine. But do you have to put a stop in this? Do you see this as one which, okay, Alpesh, I think it could. Well, it's really a question about how much pain you can tolerate. Because look, 61 to 20 could happen. It's fallen before, but at the moment it's going here, and it looks like that direction's in place. Now that's not data, that's narrative. What's the data look like? Well, on the data, it's not part of our great investments program yet because it's not 7, 8, 9, or 10 yet, and the momentum's not right. So it's not quite in the crosshairs, but it's one we keep an eye on. It's not in the crosshairs, but it's one we keep an eye on. These are the biggest movers of the week. Okay. Overbought, so not one at the moment, but if you wanted to do it, I'll tell you where you'd put the stop. You'd put it there, and that's your projection, and you can look it up in your own time more. Now, Paycom is there and does fit the profile of the program. Okay, now if you did want to put your own stop, I guess you'd put it all the way down there. Okay, do your own more research if you wish, of course, with the others. Just because I said it's in the program doesn't mean you have to do it. Too overbought, unfortunately, but it does hit the 8, and you'd probably put a stop there. Okay, so we're looking at a lot of different factors here. Garmin, 8, that's the projection, maybe the stop there, but it's overbought, so it doesn't fit the program. Outside of the program, that's what you do. Outside the program with this, that's what you do, and that's the direction because it's overbought. Target result, there's a lot of overbought ones. That's the direction. Beautiful, little volatility, but overbought. Can that keep going? Yeah, that can keep going. Okay, some of these, when they break through its average, this is a measure of the average prices, short and medium term, as a depiction. That's what they tend to do. I know all of these guys love it. Right, so there's your structure for that. United Continental, where's your structure? There it is for that, but overbought, so it doesn't fit the program even though it's a 9. That direction, there's your stop. That's what you're looking at. Reward risk, it's all there. Maybe you put the stop down there. So there's a whole lot there. Costco, which I love. We keep an eye on it. At the moment, it's not in the crosshairs because it's not 7, 8, or 9. But my God, if you wanted to buy it and you think that projection continues, i.e. this projection here, then do you put a stop on it? Well, if you really have to and want to, you'd put it there, possibly even there. Right? They'll love it. So there's a lot of good stuff. Now, Apple, I'm going to leave this for my Great Investments Program people. As you know, I continue holding it. Amazon, I continue holding. So these I'll leave for the Great Investments Program people who are already on it, and I'll discuss it on the program site because I'm giving you enough. Don't forget YouTube, Bank of America. Look, the banks are doing well. I do this as a update on the markets, and yes, you're welcome for those who've been following it and how much you've been making this year. You've gone from 34 to 46, so well done. Netflix continuing to soar. This will almost certainly be one of those, I think, which will just continue higher rather than pulling back. But be warned, if it does pull back and you see this pattern happening, then get the hell out. That's your exit story. Other than that, there's your 78. Equally, you might put a stop loss there. So at least you know how much money to risk that. If that gets hit, put so much money that you don't lose 1%, more than 1%, and there's the upside. It is an 8. Right, there's your Netflix. Walmart, another one we always keep an eye on, not quite in the crosshairs because it's overbought, but another one which will probably continue going. So get into it, put the stop loss there. There's why it would work and will likely continue working. Discretionary consumer spending is going through the roof, as you know. So as I said earlier, I'll talk about consumer discretionary as one of the top points. Well, Walmart, Netflix, that's all consumer discretionary, doing well. This should continue chugging along. I guess if you wanted to put a stop on it, would you really put a stop loss on Warren Buffett? Well, if you really needed to and wanted to, that's where you'd put it, but you probably wouldn't, would you? And you're working on the basis that I'll continue chugging up that direction. Eli Lilly, no, it's coming to being a daddy bear. It's one of the quality 5+, and it looks like a daddy bear. It's not quite pierced through. So at the moment, wouldn't touch it. I'd rather wait. Walt Disney, well, all those losses it had, it's now just made back up again. This is high risk because it's very volatile. Look at that. So don't go near it if you don't like volatility. It's an 8 again and should chug along. So there you go. Harshil, I'll have to do a separate one on that one. I have looked at it and it was doing rather well, if I remember rightly. CVS Fallen hasn't quite reacted, and okay, I won't go through all these. I've given you a lot, but you can see block, it's a 7, and yes, should do that. So there's quite a bit, okay, to go through. Remember, it's easy to open a SIP or ISA. That's all you do. It doesn't have to be Barclays, could be anyone. You go online. Please look after your pensions. Okay, it's really critically important to get those returns in them. Why? Because look at this, Daily Mail, 1/5 of its value this year by some pensioners have lost. That was the Daily Mail 2022. This stuff happens. Give workers power to ditch pension schemes. Why? Because they perform so poorly and you don't realize it because you think it's in the hands of experts. You're the experts. Right? Why do these retirement face massive losses despite FTSE highs? They can't even convert it in because it is an institutional scam. For the simple reason they buy a whole load of bonds and the price of the bonds falls because the yields go up because they F up the budget. Okay, so the price of the bonds that they bought have fallen, so your pensions dropped, or because they've sprayed and prayed in a whole load of British companies which have gone nowhere. Okay, those are the two main reasons. How British fund managers become a pointless expense for investors, that's the Telegraph. Worst fund managers take $500 million in fees for investors. I'm sorry, if you don't realize your pension's screwed with these fund managers, you've not been paying attention. I've done, my podcast is on my LinkedIn. Okay, so do follow me on LinkedIn. And then you got these Muppets apologizing, these celebrity fund managers. Don't fall for it. Scottish Mortgage Investment Trust, that's 50% down. They put your money in a fund. That's 2022 when the market falls. They can't go into cash. You can go into cash if you're managing your own. Once in 7 years, you need to go into cash. If it's a daddy bear, remember how I've said you look at that. I've been saying this for 25 years. I'm not new to this. That's my column. That's me with hair. When the hair was up here and didn't move quite down to my chin. Diary of an Internet Trader, 1999. I've been switching virtually all of my long-term holdings from UK into US stocks. Alpeshpatel, Financial Times, 1999. All right. September 2024, 25 years later, same newspaper, UK pension fund allocation to British stocks hit historic low. I mean, talk about being ahead of your time, but 25 years? Yeah, nothing new. By the way, it was not 1999, but it was 2004. So it took another 5 years before the British government said to me, "Will you do this for us?" And I've been doing it since my 20th anniversary this year of my government role as. Oh, I think I've got the card somewhere. Here it is. There you go. I don't know if you can see that. I don't think I show that very often, do I? It's my British government card. Da, da, da. They gave me a little gift. Well, actually, the Foreign Office gave me a little gift. I don't know if you can see that. It's a card holder, business card holder with a crown insignia on it. It's a nice little one. Anyway, don't get distracted, Alpesh. Quarter of your pension gone in 1 year. That's Blue Whale, one of those celebrity funds. 27% down in 2022. If you did it yourself, you wouldn't have had that problem. So people ask, how was your performance? 2020, when we launched, 2021, that was 54%. Why? Not because of us, but because we followed the data and the data produced that. Ravi, I think you're on. Ravi got Crocs from our selection and couldn't believe it. He thought life was going to be so easy as a result. Went to send 12 months, or if it drops 25% from entry is the simplest of all rules. If you want to see the videos, these are videos. Press the video button, listen to them, alpeshpatel.com. Is 40% realistic? Not every year. If there's a market tailwind, which there is 5 out of 7 years, that's our performance. So 2020, 21, I've shown you the 54. 2022, call it 0 because the markets were down. 23 and 24, well, 23 is that, 80% because the markets were up so much, and it was these. I didn't know NVIDIA was going to go up that much. If I knew that for last year, I would have put all my money in NVIDIA and done 3 times the bloody leverage on NVIDIA. Okay, I wish. There's Meta, there's Sterling Infrastructure, Tesla, and all the rest of it. We just followed the data. We just followed the data. And part of the data was this from Goldman Sachs. It's their Goldman Sachs Research Quantum Database. It's a slide which is on the online education. Cash return on capital invested. Companies in the top 25% generate 30% per annum. That's why we look at the data. We get the research from Nobel Prize winners or Goldman Sachs or hedge funds. Okay, the best of the best of the best, not some random off the internet. And we plug that data in and we follow the data. Not my narratives, not my stories, not my beliefs. Trust me, if it was purely my data story, if it was purely my stories outside of data, I wouldn't trust me. I don't trust my stories and my beliefs. I trust the data. Okay. Hedge fund manager of Centaurus Capital. Great job making such a Alpesh about my books and all my other stuff. So lots of credentials, BBC, Coutts Wealth Management, Financial Times, and so on. If you want to get a tour and understand some of this in more detail, I'm going to answer some questions right now. Then message Paresh. Now, poor Paresh, everybody thinks he's my bag carrier or something. He's not. He was the co-founder of a hedge fund, and he developed all the strategies for it, which incidentally are in here. Sorry, actually, they're in here and they're in here, which people don't realize. It's one of the biggest secrets we've got. Every single strategy he put into that hedge fund is actually in this book. He co-authored with me. You can see it there. He used to be a floor trader at the London International Financial Futures Exchange. One of my closest friends, might be my closest friend actually. Poor guy. 2012 co-authored these books with me as well. But for some reason, people sometimes think he's my PO or something. He's not. The stuff he knows more than I do. The stuff I know more than he does. Together, it's a really good team. UK Pills have maxed out their credit card many years ago. I would have thought, Andrew. No, we're still able to borrow more money on the international markets, just eking out that credit card a bit more. So have a look there. Don't forget to have a look at alpeshpatel.com/links. I'm going to answer any questions if you've got any at the moment, and my campaign for $1 million.com as well. So if you want to know how to get access to the database, be part of the Great Investments Program, go there. If you want to not have a call with him because you don't want to speak to him for whatever reason, sometimes I feel like that, then go to alpeshpatel.com/shares or links page and you'll see what we do right over there anyway. Okay, any questions? I will speak to you happily, good people. Are there any questions that I've missed out? Let me know if there's anything I've missed out as well. Now, somebody mentioned ELF, the makeup company, isn't it? Let me just have a look at that for you. Okay. Yeah, and by the way, if you want to know about the program, how we give access to data, what my ambition is to turn asset management on its head. When I set up the hedge fund in 2004, I realized that with the long only market, the fund manager market, they have a conflict of interest with you. They their fundamental conflict of interest with you is that they've got a lot of capital and they can't tell you to go into cash. So they will drag you down in the negative years. And in the positive years, they won't put concentrated amounts in these things. They'll just spray and pray and hope for the best, i.e. less downside volatility. So they really F you up. The closest person to doing it properly is actually you. It's DIY. Do it yourself. It's right there. You don't need the educational stuff. Some of my students have it, but actually you don't actually need the educational stuff. There's a lot of it there. We give you all this updates and stuff if you're on the program, but I give you access to the database, the Excel spreadsheet that I showed you earlier, and access to me for life. And the way to avoid a conflict of interest is we don't charge a subscription. Because if we charge a subscription, we'd have to keep telling you to keep buying, even when in some years you shouldn't be buying. Okay, you can have the video reports and all the rest of it. So that's the program. I'm going to have a look at, thank you very much. If there were bits you liked, if there were bits you didn't like, just let me know so we can improve. Elf Beauty. Okay, so somebody's asked me about Elf. I have looked at, is it Elf or ELF? How am I supposed to pronounce it? I guess my biggest problem, so lots of buys. My biggest issue with it is, and I've not looked at on our value growth income rating what happens. My biggest issue is it's a falling. So let's say it just falls up to about here. That would suggest that we're going to continue getting a drop to what? Maybe worst case there. Worst case. Best case, you just go up 282 odd % like it's grown before. But let's say it doesn't grow at that rate, but instead starts growing at the previous historic rate that it had, a more steadier, slower rate. Then you're looking at 83% over the next year or so. Not bad. Okay, but you might get that fall first. If you got that fall first and then you had this gain, then you're looking at a more modest 10% over the next year. So best case you've got is 73% over the 1 year. Worst case you've got is you're going to go down first and then up, and you're only going to get 10%. On both occasions over the next year, it looks like a gainer on that basis, as long as it resumes back up. Of course, none of those things are guaranteed, and it could just, of course, I guess the real worst case, it just goes back down to where it came from. Drops that. I mean, you know, anything's possible, but I think that's the least likely scenario. I suspect the more likely one is somewhere between these two. And if we were to split the difference, which is not a good analytical way of doing it, then what is that? Roughly a 32%, which you'd take any day of the week. Okay, that's a rough and ready one without having looked in more detail at it, just based on the price data that you had me look at. Hopefully that you did see all that, didn't you? Yeah, you did. Good. Okay. Okay, guys, I'm gonna thank you, Andrew. Oh, my pleasure. By the way, Andrew, on that point of UK debt, I really should go because it's so late. Yeah, and by the way, you can see me talking about BBC, UN Security Council redundant. That's me calling it years before it happened, before it became more and more redundant. If you want to book a tour, you can do it there as well. And lots of Dan's now at eToro. He's the managing director at eToro, actually. Genuinely attempts to succeed in giving tools to a private investor, blah, blah, blah. CEO American Express share. People, well, that's really, I should just leave this on screen, actually. Lots of people saying nice things. What I want to show you is the macro market movers. Okay, I'm going to show you something great. I love Koifin, by the way. Not the market news. It is. Where's it gone? Here we go. Countries. I think that's the one I wanted. No, it's not the countries. Oh, it is world economics. I think it's world economics. There we go. Not GDP per capita, government debt. There we go. So our credit card. 255 debt to GDP. 135 Italy, America 122, France 110, Spain 107, Canada 107, Britain 97. I'm not saying it's necessarily good or bad because you've got to look at other things. Jobless, actually, we're not too bad. Current account, okay. not too bad. I mean, could be worse. So that's where we are. Okay. Yeah. So feel free to have a look at that. It's fascinating, isn't it? Well, it's the kind of thing I like to look at. Okay, you might say, well, wait a minute, on growth, we're a bit screwed. Who's the worst on growth? Yeah, we're right next to Russia. Not a good place to be. Turkey, in terms of GDP, quarter on quarter. It's only quarter on quarter. What about year on year? Okay, the Indians are doing incredibly well. Where are we? Well, not. Okay. So I just thought that's of interest. I thought you guys might like that. Listen, I better go because I should be doing other things as well, I guess. Sushila, that was my grandmother's name. How lovely. Thanks very much, Alpesh. Great session as always. Thank you all very much. Any questions, just email me. Anything I've missed, email me. And yeah, that's it really. Let me know if there's anything you would like to speak about in future. Just email. I'll get the messages later, or just leave the chat on here and I'll get it a little bit later as well. Thanks everyone. Have a good evening. And I'll try and do this earlier in future. So I'll try and do an 8 o'clocker rather than 9. But thank you for staying up so late with me. Thank you.